Well, the Reserve Bank of India has announced a 50,000 crore borrowing fund that banks can now lend to mutual funds, keeping in mind the liquidity crisis that they've been going through, and of course because of the redemption pressure that they hold and the panic that's been created because of recent shutting down of six schemes of Franklin Templeton fund. Now, well, what is the RBI actually offering? Well, it's opened a special liquidity fund, like I mentioned to you, of rupees 50,000 crore, where under which the RBI will conduct repo operations of 90 days tenure at a fixed repo rate of 4.4%. Well, the big question is that, is this a good deal for banks? Well, yes, it is a very good deal for banks, because banks can use this as and when they want to assess the situation and to fund and provide liquidity to the mutual funds that probably under a high risk factor or probably on the verge of shutting down, or one of its scheme on the verge of failing. In fact, RBI in its clarification has also mentioned that this will be extended to loans, investment grade corporate bonds, commercial papers and debentures. Well, this is not the first time that RBI is coming up with this kind of help. Well, keeping in mind of the situation, it was also in the Lehman crisis in 2008 when there was relief provided to the mutual fund sector, and now again an approach has been made. Well, a lot is being done for the banks. The moratorium had come. A lot has been done for the NBFCs, trying to do, though it's not a very satisfactory note on that. And now with mutual funds standing up in a panic situation, this was very much needed. But does this completely solve the crisis that the industry is facing? Well, no, nothing can, because the economic situation of the country and the state of intra and internal issues that were going on with the different sectors cannot be solved in one go. This was also before the pandemic, and pandemic has just added to the stress. But this move by RBI is definitely going to give confidence to the investors in order to go ahead and proceed investing in mutual funds, which in turn of course will help banks and NBFCs. This is a chain and will probably lead to some kind of circular motion. Well, we speak to an expert who also gives us further details on this.
So I'll tell you what. You see, mutual fund, the RBI is letting the banking system, so it's exactly in keeping with the global financial crisis, the GFC of 2008-2009. When the liquidity window was opened up by the regulator, but it was once again done through the banking system only, the banking channels only. So what will happen is that the banks, will buy, providing liquidity to mutual funds. When people are selling, for example, when they're redeeming or they're selling, the banks will buy, and particularly they'll buy credit, funds and all. Now, the global financial crisis actually pointed out that the banks benefited out of this, Karishma.
Right.
The banks benefited because when the value restoration started happening, so then the banks who had actually picked up these assets, for instance, at a certain value, and then when there is a certain amount of sort of group kind of panic mentality or whatever, then people sort of, try and sell it at whatever price it's available in the market. So banks actually picked up, So last time, on the first day itself, today, this time, it's just the beginning of 50,000 crores. Both the institutional and largely the retail investors, that there is going to be RBI support and the banking system will come forward and support, then they may not sell. They may not redeem so much. In which case, the whole purpose is served, which means the value restoration or the value upside will go back to the original investors. People who will panic will lose that, that one. But at the same time, when we are talking about this, we have to also worry about the fact that people have to play safe, particularly small investors and all. So they can redeem. Banks will buy, and they will hold. The banks will have the capacity to hold. Today, for example, if they are getting on an, let's say, RBI paper, something like 6.5%, 7%, whatever, or through, let's say, the reverse repo mechanism, if they can only get so much, on their investments,
Right.
at least here is a good investment opportunity for the banking system. So it's a win-win for everybody, Karishma.
It is a win-win, you say. All right, sir. That was very helpful, sir, for me to take down.
Sure.
Thank you so much, sir.